Hey harvesters, and welcome to Project Premium Harvest. My name is Matt. In today's video, I'm going to be talking about the trades I executed for May 5th, 2025. I'm also going to go over the trades I executed for May 2nd. Didn't make a video, but now I'm catching up with this one. We're going to be talking about how I structured my cash secured puts and my covered calls to rack in as much premium, but also capturing some sort of appreciation when I'm choosing those strike prices. We're going to then talk about how this new options trading has performed over the last 16 trading days. And then we're going to make a determination, is this better or worse than high income ETFs? So let's get started. The first thing I like to talk about on my channel is my account overview and my account value, which is currently trading at $90,743.07. The reason why I started this channel in the first place is I want to find a mechanism where I can produce a daily, weekly, monthly, and yearly income. And thus far, I started off with high income ETFs, and I slowly have transitioned just to running my own safer options like covered calls and cash secured puts. And this is where I am today. I started this channel about 11 months ago. With that being said, let's go over to the spreadsheet. Okay, let's kick this off by starting about May 2nd. The first thing I executed on May 2nd was a covered call where I bagged about $18 of premium. The strike price I was choosing for May 2nd was the 572 strike price, and SPY when it was open was the 565.01. And the thought process for trading on Fridays, I didn't want to get my 100 shares of SPY assigned. I wanted to go into the weekend holding my shares. The premium wasn't necessarily as important, so I chose a strike price that was about $7 away from at the money. And if it were to hit 572, I'd bag about almost $1,000 of appreciation at the price of when I bought my SPY shares at the 551. So that was quite cool, or the 559. And then for the cash secured side, I also chose something about $4 away from the money, and I bagged about $87. And the way I strategically choose my options for this strategy is for my covered calls, the shares I actually own, I'm shooting more so on appreciation. I'd rather not get my shares assigned. I'd rather take it less of a premium. However, for cash secured puts, I'd rather be a little bit more aggressive and choose something that is closer to the strike price so that I can rack in a little bit more premium. And then if I do buy these shares at a discount, then I'll run at the money covered calls and sell out because I would technically use a little bit of margin. And so for me to deleverage on the margin, I would just sell at the money, racking as much premium as possible, get rid of it, and then rinse and repeat the cash secured put side like the wheel strategy. And then long story short, made $105 on Friday. Nothing too crazy. Nothing was assigned exactly what I anticipated. I already made about $1,000 the rest of that week. So for me, I just wanted to end the Friday nice and clean, no assignments, and move into the weekend relatively happy. We're talking about May 5th. Happy Cinco de Mayo for anybody that's Hispanic or Mexican. Shout out to you guys. And then let's talk about what I actually traded. For the covered calls, I made about $32 of premium. And the way I operated my covered calls on Monday, May the 5th, was the S&P 500 opened at the 562.58. I chose something about $4.50 away, or was that $3.50 away? My math is off. Or 550. And so it gave me a little bit of appreciation because I did buy my 100 shares of SPY at the 559.62. So I would make about, almost $800 of appreciation if it were to hit that strike price. But then I also bagged in about $32 of premium. So that's what I was looking for. Didn't get the shares assigned because the SPY closed at the 563.51. So let's talk about the SPY cash secured put. For the cash secured put, same thing with what I was discussing about my Friday trades is I made about $67 of premium. And I was shooting for a strike price of the 559. If I were to actually get this assigned, this is a great price. And then I would just turn around, sell at the money so that I can sell out because I would take on a little bit of margin to own those shares. And then the SPY opened at 562.58 and then closed at 563.51. So it was nowhere near executing that option. So bagged about $67 there. And the last thing I ran was an nvdy cash secured put. I made about $74, and it's a week-long cash secured put. Made $74. The strike price I chose was 108, and I think this is a great price if I were to get this assigned. And if I don't, bagged $74, continue to move forward. And then the nvidia, when it opened, was at $112.90, and then when it closes at $113.83. So nowhere near closing yet. We still have about 4 more trading days, so we'll see how it plays out. But I don't necessarily think that nvidia is going to go down that low. And if it does, great discount, turn around, sell out the money, and get rid of it, and then cash in that premium. Okay, guys, this is the holistic view of the last 16 trading days. And let's take a gander if this is winning or losing. So for Cinco de Mayo, I made that $173 of premium, and my account was trading at that $90,735.49. And if you look at how much premium I have made in those last 16 trading days, it's about $3,158.53. And if we look at that as a percentage, basically taking the account value when I first started, April 11th, to what it is right now, it's about 5.12%. Let's talk about the trade winning percentage. The trade winning percentage, I'm winning 93.75% of my trades. I had 15 winning days, one losing day. The one losing day was pretty bad, but we learn our lessons in blood sometimes, and that's okay. 16 total trading days. And if we look at the average premium I make per day, it's about $197.41. If you look at that as a weekly premium, it's about $1,052.84. And as a monthly, it's about $3,158.53, because I haven't been doing this for a month. In about 4 more trading days, actually, I'm going to look up what the average amount of trading days per month is, and then I'll come up with the correct average for monthly premium overview. But for me, you guys know me, I like to make some estimates about how the performance is going thus far. If everything stays exactly the same, status quo, in the remainder of 2025, I'm going to make $37,902.36. And if we look at that as a percentage, that's 44%. Usually the S&P 500 over the long-term averages somewhere between 8 and 12%. And to make 44% over a year is quite fantastic. Now let's look at the weekly tracker. The first week that I started trading these options, it was a massive week. I made $1,688.11. Week 2, I was a little more conservative, a little bit less premium, and I was trying to choose more appreciation. Week 3, disaster, one bad trade or one bad trading day kind of led to a big loss, but then we had a couple winning trading days after that, and everything was okay. The week after that, made $1,188.50, which is last week, pretty good. And then we're starting off Monday, Cinco de Mayo, at $173. So everything is going pretty good thus far. For the month of April, we made $2,289.53. And for the month of May, with the 3 trading days in May thus far, $869. And then the yearly premium, we already talked about it, $3,158.53. So yeah, guys, so far, I definitely like trading my own options because I think they're better than high income ETF. High income ETFs are basically taking your own money out of the share price to then pay you back, versus this $3,153 or $3,158.53. That's raw money that I can use to do whatever I want. That's not the fund manager just paying me my own money back. I can take this, use it for a truck payment, use it for my mortgage, pay some cell phone bill. But for me, I plan on reinvesting every single dollar, buying more SPY, so I can have another 100 shares of SPY, run more covered calls, more run cash secured puts, continue to grow this account. Eventually, I'll have that financial freedom. So now let's go over to Robinhood and talk about what kind of trades I plan on executing for May 6th. All right, guys, now that we are back at Robinhood, let's press my favorite button, the trade SPY options, the money printer. You click on the button and then money shows up in your account. All right, now that we are at the Robinhood option screen for SPY, do not ever press this buy button. There are times when if you run leaps, this could be a great strategy. However, most time people choose monthlies and weeklies that are going to lose them money. So I would just hit the known, trusty, covered calls and cash secured puts. So for a covered call, what you need to do is you need to own 100 shares of an underlying, 100 shares of one contract. And in this column over here, which showing these prices like the $1.36, $1.79, you basically multiply that by 100. So that's kind of how much premium you're making per contract. So if you chose the 565 strike price, you're making $136 per contract. Right now, SPY is trading at the 561.63, and usually I like to choose a strike price that's somewhere between $5 and $10 away from that strike price. So let's look at the 566 and see how much premium we're going to make. The 566, we're going to make about $100 of premium, but ideally I'd want to choose something a little bit further. Would I like $100 of premium? Yes, but I also don't want my shares to get assigned, so I would rather choose something a little further away. So maybe this 567 is something I would be looking at. If we look at the delta, about 0.24, it means 24% chance of it being executed. So maybe I might choose this guy. So we'll just add that to the queue for tomorrow. And then let's look at cash secured put. So to run a cash secured put, you have to do sell put. And the way cash secured put works is a investor is going to pay you an upfront premium to lock in shares at a specific price. The only thing you need as an investor is collateral. And what is collateral? You either need cash or you need margin available, so that in the case that the share price does go low to that strike price, they're going to get assigned and you have something to buy those shares as you agreed upon because that investor paid you that premium. Let's take a look at what the strike prices look like. So like I do for my covered calls, I choose something $5 or $10 away from the money, but it also depends on if I'm risky and I just want higher premium. Let's see. So maybe for the cash secured put side, I would choose something again, maybe this 557 or 558, maybe bag in this $75. And so the way this works is if you choose the 558 strike price, the share price for SPY has to go 558 even or below. So it'd be like 557, 556. If it's anything above that 558, like it's 558.01 or 559, you're not going to get those shares assigned. You get to keep the premium. But if you are at the money, which is the 558 even, you're going to get the shares assigned at the close of business day if you're running a daily on it. I usually run dailies. I like the flexibility of running dailies because then you could change as long as the market is moving. And if you do a weekly, you can't really change with the market. Yeah, the premiums can be higher, but you can't change with the fluctuations. So that's kind of the plan, guys. Let's see how it plays out in the morning. We can make a plan at the evening time, but it really matters in the morning in the pre-market. So that's the best time to really come up with a plan. But just kind of want to talk about how I'm thinking and how I'm choosing some of these strike prices. Yeah, guys, that wraps up the video. Let me know what you think in the comment section. And then that's what I have for today. Matt out, and I'll see you at the next one.